Our final panel of the evening is our Global VC Dealmaker panel, where we're going to move from the China outlook to more of a global perspective here. Mark Thompson from Sidley Austin is coming up right now. Russ Shaw from Tech London Advocates. Frank Meehan from Spark Labs Global. Hussein Kanji from Hoxton Ventures. Simon Tobelem from Array Ventures. And is Alpesh here? Okay. So this is our global VC panel, which I get to moderate. Okay, great. So one of the things I was surprised about is hearing about how valuations are actually fairly reduced here. So why would that be? Because it seems like the London tech scene is red hot. So why are valuations low here compared to other markets like Silicon Valley and Israel and China? Any comments? Russ, I see you.
All right, thank you. I think there's probably a bit more of a realistic approach here. I mean, I think if you look at Silicon Valley at the moment, valuations have certainly come down, and I think there's a lot of concern about that, and will that reverberate in this direction? You know, we do have a number of unicorns here, which is encouraging. We've got 12 in London. We've got, I think, 14 or 15 across the UK. That's positive. But I think investors, you know, there is concern here that could the valuation still be high here, but given what you see globally, maybe not so, and that's encouraging. So I think over time we will continue to see valuations go up. The market's a bit topsy-turvy, as we all know, a lot of volatility, driven to some degree by what's been going on in China. And I think London Tech has been a bit immune to that, but I think we will be caught up in that. So I'm cautiously optimistic, but you know, let's look at this for the long term.
Okay, Simon?
I think that valuation is a relative concept. First thing is that if you look into France, for example, valuations are lower than in the UK significantly, less players. So you have to be careful when you speak about European valuation. It's a very disparate market. The second thing is that there has been a lot of, and I think it's maybe safer now, huge amount of money coming from the capital markets into the last DE rounds and pre-IPO rounds, and that has pushed the valuation too high. And it's slightly better now that this is coming down.
Mark, from your perspective as a deal maker, and you're seeing both sides of the coin. So do you think valuations are lower than?
Well, I don't think there's any question that the valuations are lower here as compared to the U.S., but as you just said, they're higher here than they are on the continent. Part of that's a supply and demand issue in that you just got more money chasing deals, particularly good deals, in the U.S. than you do here. There's a lot of good deals over here, and there is money, but frankly, just more over there. And frankly, a lot of the U.S., particularly the VC funds, will say they don't have time to come over here because they're so busy over there, and it's just not kind of worth their effort. I think also the comment has been a little earlier about there is a spillover from capital markets into the VC markets as well, because the U.S. valuations are higher. There's just different ways that valuations are done on the capital markets. I think most people realize if you're going to do a listing, you can make more money, get a higher valuation if you go to the U.S. for that, if you're on NASDAQ or the New York Stock Exchange. And that then has a spillover effect down into the other, and you know, lower rounds of the VC levels.
Hussein, any comment on the valuations?
Yeah, I mean, I'd probably generally agree. I think it's a microeconomics thing. It's a supply-demand. There are just less venture firms operating in the UK, and then increasingly less in Europe. It's about 30% lower in the UK, and it's even lower in other countries as you go across the continent. I would also add that there's a level of inexperience, I think, in the UK and then widely on the continent that also triggers both low valuations, because I think when people are very, very scared of risk, they tend to underprice returns downstream. If you've never seen a billion-dollar company being built before and you're optimizing for cash flow businesses, you're going to price under. And these days, you kind of see not as much, but sometimes on the other side as well, inexperience on the other side, which puts insane valuations on companies like Powa, which went bankrupt I can VE Interactive, I think, has like a 1.2 or 1.3 billion dollar valuation on like 30 million in revenue. I mean, like and those are usually driven by family offices versus traditional venture firms who probably know a little bit more about what they're doing than the other guys.
Yeah, what happened with, you brought up Powa. I'm very curious about that because they did a joint venture with a Chinese company.
Yeah, I think
So
they were
what happened
signing
there?
with UnionPay. I mean, I think their burn rate was $5 million a month. I think they had 350 people working for them. Their product wasn't finished, or it was working, but it wasn't done. It was a company that had probably poor governance. I mean, you see examples of this in the U.S. with Zenefits, et cetera. So, it's not unique to our region, but it's probably
For the London tech scene in a strange way, and we were talking about this just the other day. It's sad that this has happened, and this has been a high-profile uniform, and this is kind of the first failure that we've seen, high-profile failure that I think we've seen in the London tech scene. I hope we learn from this. I hope, that somebody like Dan Wagner, who's been running it, comes back again as a repeat CEO. And I think part of the messaging that we've been talking about is, look, London's had a good run, and it will continue to have a good run, but we're going to see some failures along the way, and this clearly is a high-profile one. So let's learn from what happened here, and hopefully try and avoid some of these mistakes.
Yeah. Frank, your view?
Uh,
I haven't
well-
I haven't picked on you yet, so.
Well, look, we invest all around the world, right? So we've got, predominantly most of our investments are US and Asia, but we do invest here, but only in UK and Sweden, because I think only UK and Sweden have the longer term experience in scaling businesses. There's not enough of that in the continent. I mean, we have Rocket, of course, but not enough besides Rocket. So that's why I like UK and Sweden. Look, I think it's very interesting. I mean, I'm going to go back to, I don't know if John is still here, but I'd love to see if he was up against, Balderton and Excel and for a very hot company, and whether he would pay extra to go into that against them, or whether he would withdraw if it was the same, or whether the startup would go, actually, we would like to have China instead of Excel. And this is what I really like about China coming in, because I think it's really going to shake up the market here. I personally would probably go, I think I'll probably go with China, because, and actually right now, look, I'm very encouraging of startups right now in the UK, especially, the ones that I've got, is that I'd like to see you go to Asia rather than do the Sandhill Road runabout, because you probably aren't going to get anywhere. They've got enough problems of their own, and I think, Asia's going to be much more open to it. So I think it's really interesting. But, it comes down to those little balances when, the Chinese VCs, what's going to happen against the local ones.
Did you want to add something?
Yeah, I mean, just back to Powa for a second. I think it was kind of on the fringe. I mean, it wasn't a venture-backed company. I mean, it had these big kind of numbers, and it showed up in the unicorn charts. But I don't think the general market really cared all that much. So, I mean, it would be great if Dan kind of shakes it off and kind of comes back into the market. But I don't think it will have a negative persistence effect in London. It was just one of these like fringely, insanely valued companies that just kind of disappeared, which doesn't make that much of a big deal.
So one of the things that I've been picking up globally is that we're at the end of the unicorn phase, and I'm just wondering if you think that that's the same here in the UK. I've been reading about how the Silicon Valley slowdown is also impacting European venture capital startup scene, tech scene, and what are your views on this? Is there a spillover?
I'll have one quick one on this one, because I have quite a lot in the US. I think too many companies in the US spent like $400, $500 million to get like a $30, $40 million worth of revenue, and that revenue isn't going anywhere near 100 million. So I think they've just overspent, and there's a massive hangover for that. And then I also thought, going back to valuations, have got very greedy. Instead of going with a sensible, round at, the 500 million type of round from Sequoia, they only got money from Fidelity, and Fidelity doesn't care, they'll mark them down tomorrow. And I think they've just had a rude awakening from being too greedy. And, that doesn't really happen in Europe, and it doesn't really happen in Asia either, not to the same extent. So I think there's just there'll be a reckoning at that top level, but I think in the A and B, it's going to be very strong, but I think at seed, it's going to be weak.
Spillover effect, anyone else on the question, Silicon Valley to UK?
I think over here, actually, on the legal side of things, where we're sort of helping the companies sort of at the earlier stages, we're actually seeing a sort of increase in the UK as compared to, say, it was 3 or 4 years ago. So hopefully it's going to be accelerating. You know, the efforts that the government here has done with you know, Tech City and Med City and the other sort of things that are being done, those have really helped spur investment. So we've seen, you know, the government put stuff in, we've seen companies come in. We've also seen new groups accumulate capital to do venture capital investments that haven't existed here before. Obviously, we've talked about the Chinese before. We're seeing lots of, say, big companies come in and create VC funds for things like tech, sustainable tech, particular, you know, other kinds of things that are really interesting. We see the tech transfer offices at places like Oxford and Cambridge that are trying to redevelop themselves and push out technology, whereas before they were seen as a hindrance in many ways. Now they're trying to be more aggressive and be helpful. So I think we're going to see this grow here. I'm hopeful that we are, and I think so far the signs have been pretty positive.
I think the other interesting thing that I've observed over the past 6 months is, you know, we have been focused a lot as our tech community has grown here on Silicon Valley and what's happening there. But 2 big events, political events happened here last year. President Xi came to London and the United Kingdom for a week, and then the following month, Prime Minister Modi came from India. And I think what's happening now, and I was in Beijing in January, I was in Bangalore last autumn, you're starting to see much more interest in what's happening here. And when presidents and leaders of these 2 enormous countries come here and say there's a lot of interesting things happening here and take that message back, I think we're now starting to see that happen. So even though there might be a bit of a lull in terms of spillover coming from the West Coast, I actually think that's going to be filled in spades by what we see coming from Asia. It's not going to happen tomorrow or next week, but I think in the coming months and years, London's going to be at this very interesting crossroads between that strong influence from North America and a growing influence coming from China and from India. You know, Cocoon Networks and what John is doing is a classic example of that, and I think we're going to see more of that come this way.
Well,
Yes, Simon?
yeah, I think that Ross is really mentioning something interesting here because it's really yin and yang. You've got the India and Chinese player, Indian and Chinese players coming in, so that should be positive. And especially they need the technology, and they find that the prices are still quite okay. Well, we're not going to say cheap here. On the other hand, we have the issue of venture capital repeating sometimes these mistakes from the past. Before the crisis, the venture capital asset class was the least popular because the IRR was quite low. IRR is starting to get lower, actually, because there have been valuation going too high. And when I hear what Christian was mentioning earlier in his talk, saying that he wasn't impressed by VCs that he met, and it's only when he saw somebody from the field that really he had some kick and some connection. So we need to be careful to really bring value, not just money.
So I was interested in Frank's comment that China capital is really going to shake up the UK market, and I'm interested in how you think that's going to happen.
Right.
Just yeah, okay, let's hear it.
Well, I mean, so, you know, I used to obviously work for Horizons, and so, you know, a few years ago, I saw a little company called DeepMind, and there was like, you know, 10 of them in Russell Square, and they'd gone around and around the UK and couldn't get anyone to invest in them. And Founders Fund had gone into it, and, you know, within an hour or so, we decided to put quite a substantial amount of capital into them. And look, they were doing very deep tech. It was very, very long term. They wouldn't give us a deck, wouldn't even give us anything. But it was definitely there to persuade them. Then again, we tried to take them around the UK VCs, and no one would do anything. And of course, you know, look, in the end, it was obviously Chinese and American money that made that into a big success. Those type of long-term bets will come from the likes of Founders Fund and the likes of China. There isn't enough long-term thinking here, and I think it's still very, very short-term. It's very driven. It's very banking-driven. It's very numbers-driven. And that's why you get a lot of e-commerce and marketplace stuff, which is fantastic, but you don't get enough deep tech. So what I think China is going to do is it's going to put a lot more emphasis into deep tech. They'll be they're already scouring around looking for that, looking for AI stuff that they want to take back engine rooms that they want to take back into Asia and power some of the stuff they've got in Asia. And of course, the talent is here. And that's what's going to be very exciting. I think there's going to be a real transformation out of, which we are known for. We were doing very well in fashion, e-commerce, and marketplace. But I think there'll be a transformation into deeper tech across cyber, fintech, AI, ag tech, food replacement tech, a whole lot of good stuff. And they'll be putting money into research as well. That's what's going to be cool.
Hussein, do you agree with that?
Yeah, I mean, I think we have to wait to kind of see how it all proves out. I mean, I think I would take exception to the fact that not everybody here focuses on future things. I mean, we've done a couple of deals now with the DeepMind guys. We're one of the only VCs that they like working with because we take a very long-term view. So, okay, good. So at least we're just poor. We're really small. So that's our only conundrum. I think generally speaking, if you take a look at this market, there's a fundamentals and then there's kind of a market inflation or conflation element. And if you look at fundamentals and we look at the absolute growth of some of our companies like Darktrace or Deliveroo, I mean, they're straight up exponential growth, right? So whether the market's going to put a premium on that or not a premium, it's not going to matter that much because, I mean, they're growing literally exponentially. We're talking about growth rates of 20, 30, 40% month over month. So pretty darn fast growth, and that compounds exceptionally fast. When the markets are hot, unfortunately, this is just the nature of financial markets, is you get a lot of lemmings, right? It's kind of monkey see, monkey do, and then everyone lines up, and then everyone comes in and prices go up, and eventually those markets kind of deteriorate because, all the dumb money kind of comes in. That's kind of what's happened in the US. The very top of that it's unaffected because they're going to do good deals no matter what because people want to work with them. And then eventually when the markets kind of go down, the dumb money kind of pulls out. We're in a weird world, right, where these financial markets are very interlinked. So it is a global world. So it's not even a spillover. It's interlinked, but there's lags, right? So a very good example of this is if you look at Grubhub today in the US, it's trading at a huge discount to where it was before. And then you look at Just Eat, and Just Eat's trading at a massive premium. And they're exactly the same business. There's no reason why those two comps should not be the same. And it goes back to this lag is there are not that many experienced tech investors in the continent and in the US who are mostly the shareholders for Just Eat who are kind of lagging in. I'm getting so many calls from hedge funds in New York who are seeing what's happening in Grubhub and are shorting Just Eat to bring the price down in line with market comps. But these things don't happen instantly, right? They take time. So because markets have lags, you can make money as an investor.
So you're talking about regions and so forth. I'm curious about what do you think about for the startups going forward if Great Britain remains as part of the European Union or splits off? What is the future of it? What is it one way better for startups or not?
We surveyed our Tech London advocates a few months ago, and 87% said they wanted to remain in the EU. We're starting to build a list of case studies, trying to understand what's driving this. Many of the entrepreneurs, startups, and scale-ups I speak to are very concerned about a Brexit. They like the fact that they have access and will have access to 27 other markets, the Digital Single Market Initiative that's coming through. And the flip side of it is nobody seems to know if we do have a Brexit, what will that actually mean? We've already seen the pound decline dramatically this week, and I think the next 3 to 4 months, we're going to see a lot of volatility here. If we wake up, hopefully on the morning of the 24th, and see that the UK is still in the EU, I think there's going to be a renewed sense of optimism going forward. If we see that we've exited, it's anybody's guess. My fear is, as many of you know, when there's a high degree of uncertainty, investment gets scaled back, people will cut back, and my concern for the London tech community is that we won't see the level of investment going into tech the way we've seen over the past few years.
Just quickly add one quick thing to that. I think, look, in the US, it's it's getting more and more insular, and that is leading to Silicon Valley finding it harder and harder to get people. And I think we have a tremendous advantage here in London. Everybody in Silicon Valley always says, please give us more visas, right? And according to Trump, as far as he's concerned, like nobody's going to get a visa, right? Unless he's marrying one. But but I think look, that's the problem, right? And so I think that's a fantastic advantage we have here, and that we're able to take talent from absolutely everywhere. It was one of the booming reasons why Skype boomed so fast here in the early days and switched here, and 400 people up in Tottenham Court Road of all different nationalities, and it was fantastic. And I think Asia has that transference as well, and I think it's a big advantage to Asia And I think, if it goes insular in the US, it's going to go backwards, and we shouldn't go backwards with them.
Yes. Well, I think that one of the reasons why the Asian money is coming here in London is because London is a gateway to Europe and to the US. And if London is not anymore of this, or has not anymore this position, well, actually that could impact the decision. You have digital places in Berlin and in Paris who are only waiting to get this kind of amount of money. So we need to be careful about the competition.
Mark?
Yeah, I think a couple things were said. One is uncertainty. Whenever you have uncertainty, that's just going to kill, a lot of investment, right? It doesn't. We just, it could be better, it could be worse, but we don't know at this point. So that just sort of makes it going to be worse, just by definition. It's interesting. I've actually talked to a few private equity funds, not venture funds, but buyout funds about this over the last few days. They're sort of, and these are sort of bigger guys. Their views have been that, really kind of before Boris came out the other day, they sort of discounted it's not going to happen. Now they still think the UK is likely to stay in, but it's a lot closer of a bet now. So the interesting thing is that, the VC level, your exits are going to be driven by your larger private equity funds potentially doing some buyouts. The buyout funds now are thinking about hedge their bets in the UK. Do they do some sort of hedging? Do they just not come here because they don't know what's going to happen? But what we actually have seen are some of these funds now are saying, we are not going to do new investments in the UK, or we're going to limit them for some period of time because we just don't know what's going to happen.
What about deal making in terms of the consolidation that we've seen a lot in China, where the tech and India too, where many companies are merging and acquiring, and are we going to start to see that happening more and more in the UK and the European markets as well? I think it's a sign of a maturing kind of tech market when you see this kind of consolidation happening. Are you starting to see that happen here in the UK?
I would say consolidation. I mean, I definitely think the UK is becoming, if you look at the percentage of acquisitions that are being done and the percentage of large acquisitions that are being done, they're up and to the right. And if you chart them out historically, there are more and more of these. SwiftKey's an example, DeepMind's an example. Usually they're American buyers, and maybe time will say that they'll be Chinese buyers or other Asian buyers. But today it's been primarily either UK other businesses or the large ones have really been American businesses that have been acquiring. So it's unclear to me if that's gonna change. In terms of consolidation, I think one thing that's pretty different about the UK relative to or Europe relative to the US or even China or even India is because we've been capital constrained. People here care a lot more about unit economics because they're poor. They don't have the balance sheet to be able to do crazy things. There are a handful of companies that are given large amounts of money, but kind of in the DNA here is because you're not going to start a company that's going to have 10, 20, 30, $50 million from day one that can do crazy things like offer you parking for £5. And this is my favorite bubble company. Or in San Francisco, you can get a valet on demand. It's a pure consumer surplus business where it's money coming out of the venture firms going straight into people like me's pocket, right? Because it's a super cool utility. You click an app and some guy shows up and takes your car and parks it for you, and then they charge you £5 an hour and they cap you at 3 hours. They've since raised rates a little bit, so it's $15, or not even pounds. In San Francisco, which if you go to a garage, it's like 15 or 25 bucks, and you can keep it the whole day, and then you hit an app again, and the guy comes and brings your car wherever you are. It's a phenomenal utility. I think it has no unit economics whatsoever. I think the entire premise is by giving them your car, maybe you're going to also have the guy fill up the tank, and you'll be able to charge 2 cents per gallon extra on that and make that as your margin. I mean, I just don't understand this business whatsoever. And the shocking thing is there multiple companies like this. So once one started, there are like 2 or 3 more that started and got money chasing after the same market. This stuff doesn't happen in the UK, and it doesn't happen in the continent. You have to think about your unit economics because nobody's going to give you that amount of money to do an idea like that. So so I worry less about that here, and I worry less about consolidation because I just don't think we're in that kind of market.
What's a better path today, IPO or acquisition for an emerging company?
Well, I'm not asked for IPO.
What?
I would say, look, I mean, I'm not sure. I've never really invested in something that's looking to get acquired from the start. So I think it's really tricky. I mean, if you get to that scale, someone's going to come knocking, and if you're very valuable, someone will come knocking, and then you go back and you think about what you're going to, whether that's something you should take or keep going. I think IPO is a very, very tricky one. You only, you do it because you can put lots of cash on the balance sheet, and but that's, the main reason. But then, you've got to be careful about it afterwards. I just come back to, I think that there's going to be a lot of acquisitions here from Asia, and I think that could be very interesting. It's a shame none of the big UK guys ever do acquisitions, but like Vodafone, etc. But they're lost.
So I think there's only one answer to that IPO and acquisition question, and I'm speaking as a venture investor, not a public market investor. The answer is both. You have to have functioning capital markets in the public markets, and you have to have functioning M&A markets, and the reason why is they drive each other up in terms of price. That's the only way to get the best price for a company, when you know you can take it public, and you know that there's a series of people who are willing to buy it, and you play them off of each other until you get the maximum possible price. It's something that happens well in China, it happens well in the US, and it doesn't happen well here because we don't have the same kind of capital market infrastructure.
And actually, following up on what Hussein said, that means that if there's less IPOs, the prices of future M&A should go down. So that's something that we could expect also, because there's one exit less.
So for the emerging company, the founders out here in the audience, should they be looking at China for expansion opportunities or not? Or just stay here?
Depends on what it is.
Well,
Depends
okay,
on
so
what it
what are the markets that
Well, I
it
think
would
you
be
got to,
best
you
for?
got to be very careful. I mean, Zuckerberg played China incredibly smart, right? Because he realized very early on that when Facebook was going to go into China back in 2007, etc., when there was a lot of stuff about it, they were going to be the clone of the clone. Because Ren was already there, and the Chinese would have just seen Facebook as a clone. Now, of course, he's waited until Facebook is so big that even everyone in China knows who Facebook is, and they have a position of strength. So I would be extremely cautious about going into China unless you can do it from a JV perspective, or you can do it from a position of strength. It has to be from a position of strength or something that's extra value that you cannot be just, copied or undercut. Uber spending billions in there, and and Didi's doing it smarter. So you've got to be careful.
Yeah, most of the American companies in China have failed. So I don't know if that is a prognosis for the UK as well.
I would concur with what Frank's just said. Maybe the one thing I would add to that, and I think it's going to take a little bit of time, but when I see organizations like Cocoon come in and set up a fund with half a billion pounds, if you're going to think about a market like China, having an investor from here who knows and understands the market, who's willing to invest and help you into a market like China, I think is something to seriously consider. You don't want to do it in isolation. You don't want to do it on your own. But if you've got a backer like that saying, look, we like your business a lot. We think there's opportunities in China, and we can help you because we're well connected back into the Chinese market. I think that's something that should be seriously considered.
Yeah, okay. Any questions from the audience? Okay, good question.
Sorry. There you go.
We work with a lot of companies that go into China. It is very difficult to say, I am a company here in the UK, and I'm going to go open up a storefront, office building, whatever, whether it's in Hong Kong or Beijing or wherever you're going to go. It can be done. You need to have advisors do it. I think there's a couple things to think about. One, if you're going to do it, it's great to have, or you need to have a partner of some sort. They could be one of your investors, or they could be a joint venture partner. I think that's key. It's extremely expensive for UK point of view to go over there. The regulatory hurdle is immense. The tax hurdle is immense. So when people are putting their toe in, our experience is it's a lot easier initially to go with some kind of a partnership, be it a licensing or a joint venture. but a lot of it depends on sort of what your product is. But my experience is that partnering is a better way to go, at least initially.
Another question, please. All the way in the back. You're giving a challenge to our microphone runner.
Hi, my name's Casey. Just a quick question. We talk a lot about fintech, but regarding to raising finance, do you see any new financial innovation to raise finance for entrepreneur? And in particular, what's after the crowdfunding phenomenon? What was going to be the next wave of innovation that might come to UK and possibly to China as well?
Next wave of innovation coming to the UK, possibly from China.
I guess I'm the skeptic here. I don't think there's that much financial information. If you don't have money, you go to people who are richer than you and get money. The only other way to do this is you take lots of smaller checks from people and add it up until it becomes a big check. There are different ways to do this, and maybe the cloud platforms give you a little bit more of an efficient way to do this, but generally it's kind of the same formula, right? You go to people who have money, and if you can't piece it all together in one shot, you get it from lots of smaller folks and piece it together. It kind of is what it is, right? I mean, I don't think there's that much innovation in this space.
Interesting. Do you think there is from China?
And if lots of people in China have money and they want to invest, the market's gonna follow by the same logic.
All right. Well, on that note, I think we need to wrap it up in the interest of time. And thank you very much for staying with us.